G'day, Money Miners. The deal that's been talked about for bloody ever since Money of Mine was called Money of Mine. Spartan and Ramelius. It's finally happening, most likely. Announced today. And mate, with any bloody M&A and expansions that they're talking about, that means Quattro project engineering. That frickin' Dalgaranga paste plant has got Quattro written all over it. Like, who else builds a paste plant? I don't know, but there's one going in at Dalgaranga, I reckon, and Quattro are the team to do it, and any other EPC shit that Ramelius need to do as part of this.
Go Quattro.
Is it a mega merger? It's a mega merger. Let's just say.
The mega merger in the Murchison.
A mega Murchison. I like what you do. I like it. What's the Murchison ratio on the deal? 100% Murchison. Oh,
go Jeremy Palmer and go Quattro.
Oh, love it. Right. Bloody, I'll drop me, mate.
If we haven't given it away just yet, I think we're only talking about one thing today. I mean, we'll weave this one into a broader gold chat at the end, but this one is all about Ramelius and Spartan, and I reckon we've waited years for this, Matty. We were chatting about it earlier. I reckon there's a plural on that year.
Well,
Don't you reckon?
I reckon we could have ripped AI through everything we've said for the last 2 years and just created an episode based on what's been said and what should be said. So anyway, we're going to do it manual because we're freaking old school.
I love that.
Good to have you back on the show, GC.
I know, it's been a while. Nothing like a gold deal to bring me back to the table.
Nothing like a ding, ding, ding to get us started from GC as well.
Yes.
On Ramelius.
I cannot believe that there is a deal between two goldies and you only hold one of them.
Just
GC.
the one, yes. And we've got JD as a ding-ding on Spartan. So, yes, it sounds like it's finally happened.
And
so
I'm just delivering the good balanced outlook and not holding either. So
good on you, Matty.
Oh, I remember I bought Spartan at 22, sold at 40.
Profit's a profit.
Jesus Christ. Anyway, let's bloody rip in the transformational combinations. I'd actually got, there was the murmurs about it in Street Talk on Friday that this was, they were inking out the deal. I think it was Friday.
Might have been yesterday.
It was the talk at Rottnest, apparently, that this was,
yeah.
This was bloody getting close. And to be honest, even like the start of last week before I changed my mind, I honestly didn't think I thought it was just going to be too big of a swing for Ramelius to do, and they would have looked at other things. But look, it become, I think, as you've written, JD, become abundantly clear that I guess cleansing the market on that Mount Magnet long-term plan was integral to this deal happening, and Ramelius obviously share price pulled off a shitload, and without the 340 mil cash that's Ramelius are tipping in for this deal, it'd be pretty bloody close to a equal merger. It would have been, Ramelius would have had low 50s, but it's end up still got a bit over 60%. So, JD, why don't you, being the financial guru, take us through the deal and the key numbers here, mate?
Well, we've got Ali on the show, so we're blessed on the finance part with much more expertise than myself. But I'll run through the headline numbers just to get us started in case people didn't see the deal. So you talked about there, Matty, being that cash kicker that's 25 cents for every share that you hold as a Spartan shareholder, and you're also getting 0.6957 Ramelius shares. So at the 220 close price that we saw on Friday, we're talking about an 11% premium to the last close on the Spartan price, or $1.78. It's trading like a bit below that. And if you zoom out and look at the last month, it's about a 27% premium. And like you say, Matty, massively altered by last week of trading. So we'll flash up on the screen now the last 5 days of each of the respective stocks and how they looked. So over the week, Ramelius came off 18%. And obviously they had that big material bit of news with the updated mine plan at Mount Magnet coming out. And then if you look at Spartan, they ran hard. They had a bit of a down day earlier in the week, but then ended up 7% for the week, closing at $1.60. So very interesting to piece that all together and, think about all the other bits and pieces that go to a deal coming together. Obviously you spoke about that that article coming out over the weekend that gave a bit of an inside lane and gave the heads up to everyone that it was finally happening. But yeah, there's a lot to chew on there, and we'll get into that more in the details in a moment. I'll just round off on a couple other details. You've got the top 3 shareholders other than Ramelius in Spartan saying they're going to vote in favour of the deal, bar a superior offer coming in. So they speak for about 19% of Spartan's register. You've got Tembo, who were there back when the recap happened that you touched on, Matty. 1832, who came in throughout 2023, and then Fourth Sale, who've also been there for quite some time. It's a scheme of arrangement to start with, and we'll get into the deal structure as well. And the pro forma is creating a business that is capped at $4.2 billion. So had this deal happened a couple of years ago, Matty, we wouldn't be talking about a number anywhere near that big. And you've still got $500 in cash post the payout that you mentioned, the 25-cent kicker per share. So the last bit of detail, which I think is pretty cool, is that Ramelius said they would cancel their 19.9% shareholding in Spartan. So the alternative would have been for them to sort of hold them on treasury and kind of spin them out in a kind of quasi capital raise, which we have seen in deals gone by, but they said they won't do that given the strength of the balance sheet. So
yeah, and I think the best way to get your head around that, which I had to get my head around it earlier, like they've effectively bought 20% of Spartan at, lower prices. Spartan shares are going to end up being Ramelius shares, so it's like a buyback. They've essentially bought the shares a while back. The shares are cancelled, and they're bought back and cancelled them. Is the way.
Even if
they haven't lost the money, it just means that this takeover offer is effectively for 80%, and they've bought back 20%. In a way.
For the money miners that listened to the episode on Soul Gold last week, you'll remember they did the deal with Cornerstone, and for 3 years they just held those shares that Cornerstone owed in them, Soul Gold, just on treasury. They ended up selling them out to Jiangxi Copper last week, and that netted the company 18 odd million bucks. And yeah, no new shares being issued, but shares that the company held in themselves.
Yeah, and I suppose they could have, are you saying, effectively, Ramelius could have held onto the shares in treasury, then if the share price ripped up, they could have block traded them to someone else and it would sort of be a profit? Could you read it that way?
It'd be in effect a raising of money for the company, kind of like, Red 5 and Silver Lake was the other one we saw this in that was sort of alluded to in the call earlier. And there's no new shares being issued, but the company is netting 20%. They're netting potentially hundreds of millions of dollars if they were to sell them. But you nailed it. It's like a buyback in a way, and just cancel them, lower the shares outstanding. Given you've got the balance sheet strength and you can fund all your other things still with what you've got in the free cash flow that's going to come over this half year and into next year, then why not?
Is that 500 mil in the pro forma based on today's?
I think 31 December cash and bullion.
God, they're probably going to make freaking 200 mil this quarter, based on
Zepner said 250 free cash this half.
Yeah, I was surprised. I thought that was unders because based on the gold price and what they made last quarter, it's I'll be interested to see. I think I wouldn't be surprised if they make more, just because they are printing a lot of freaking cash.
And this is all happening in the context of a gold price that just touched over US 3,000 an ounce as well over the last few days too.
Yeah. I think 46.50 at the moment today. Yeah, bloody.
I think I did see that in a LinkedIn post from someone.
a pending Ramelius employee. We'll go through it. Right.
Speaking of that, get into the board, Matty.
Oh, so it is. I'll have a look. Here it is. 2 people coming over from Spartan, Deanna Carpenter coming on as Ned, and Simon Lawson, non-executive deputy chairman. Because there already is a non-executive chairman, Bob Vassy, and Zeppy's going to retain the MD and CEO role. But I think it's probably also a function. It said in the scheme doc that Mr. Lawson's shares that he gets in Ramelius following this, if it all goes through, 50% of them will be escrowed. It didn't detail how long they will be escrowed for.
Okay.
That's going to come out in the transaction booklet. So you could predict that he would remain at a minimum on the board while those shares are escrowed, and then if he chooses to do something else later on. But he is obviously going to be a part of this next phase. If he's getting a shitload of Ramelius shares, he probably it's in his best interest to get the best out of Ramelius.
Absolutely.
And they talks about lifting the exploration budget. He said in the call that he wants to really look into the exploration potential at Mount Magnet around there, and was also pushed back on one of the comments about Penny finishing early, like essentially saying, look, probably thinks there's a bit more potential there. So he's already bringing his bloody optimism into Ramelius. It's good.
Love to see
it's
it.
good to see. So, but at this stage, yeah, he's coming in to be a part of Ramelius. So,
yeah, I mean, non-exec, you can kind of read into that as you sort of like. But yeah, he did sort of speak to the exploration angle, which was interesting.
Right, JD, take us into the mechanism of this two-stage deal, you'd say. What do we call these deals? It's just
a dual transaction structure is the words I wrote down that came to mind. I'm sure there's a more aesthetic kind of way of putting it, but
the fuck off the interloper deal.
Deal
structure.
Because we've sort of seen this before, JD, haven't we? In a totally different commodity, admittedly as well, but seems to be a bit of a, like Matty said, a bit of a new style sort of approach to the structure to sort of minimise interloper risk.
The Azure,
100%.
The Azure structure.
The Azure structure, inspired by Gina Reinhardt. So, SQM and Azure was the first time we saw it when, Matty, you fantastically called it at $3.52 to the cent. You nailed it. They came in with that. They came with that structure where they'd pay in the scheme $3.52, and if that fell through, they'd have a backup $3.50 takeover, which in their instance was an on-market takeover. So very similar here, except the backup is off-market. In that scenario, I think it's interesting to think about what happened afterwards. So you had Gina start buying a heap of shares on market like straight away. She got to 15% really quickly. In a matter of no time, she was up to 18 kind of percent. And then over 2 months, they were clearly working in the background. She teamed up with SQM. They came in 50-50 and launched another bid at $3.70. So there was a few signals, and that, people might remember, came off the back of Gina coming into the Liontown deal. So that was the context. That had happened before, and that kind of butchered Albemarle's takeover of Liontown. So SQM didn't want that happening to their deal. They did what they could, but it was a tough one. If you guys remember, there was a lot of shareholders in that sort of 10 to 20% range that had a bit of a say in how things proceeded. So there was a few signals from SQM in doing that. Firstly, they anticipated interlopers. Secondly, they had a willingness or maybe a realization that they would have to work with partners, whether that be in the ultimate 50-50 structure. I'm not sure what exactly they were thinking that would look like in due course, but I think they were kind of happy with the outcome. And they had a lot of strength because they had almost 20% shareholding before, and they had something like 25% offtake rights and a few other bits and pieces. So they were sort of talking from a position of power, as is the case with Ramelius here, right? 19.9% shareholders coming into it. So yeah, you've got those kind of dual transaction structure for a reason, and that's with the idea that an interloper is probably interested in coming in, and you just want to get as much, and you're happy to get as much, even if that might not be 100% of the company. So yeah, I mean, in this instance, if this sort of goes through, and I think the outcome that Ramelius want is that the scheme just goes through without a hitch. They get the votes they need. They wrap it up cleanly. They have 100% of the company, and then they become the big fish in that Murchison kind of pond with another sort of long-awaited deal potentially pushed down the road a little bit.
And I think the trigger for this JD appears to be if a third party comes in and gains 15% or over of Spartan, that's the main trigger which flicks it from this scheme of arrangement to an off-market takeover. So
100%. You got the rest are just like those standard kind of conditions, but if that one happens and someone takes up or a company takes over 15%, it flips over to the other one, right?
Yeah, and so it means Spartans, like, it's not saying that there won't be interlopers, like, but there could be, but they will have to pay up for it. So I guess Spartan have still got the upside to potentially have someone come in over the top with this mechanism, and if that happened, that off-market takeover would sit there, but if there's a much superior proposal, people won't accept the off-market takeover. So there's still upside if there is someone come in. I just don't. Yeah, it doesn't look like there is going to. Oh, mate, sound myself look stupid if someone does come in. Look like a real dickhead. Yeah. But $2.4 billion implied price for Spartan. That's a pretty big swing for someone to come in and offer 2.7 or 3 to get it over the line. So,
yeah. So I mean, Westgold is the one that people will have on their mind. They're the only one really in the area that could also get some sort of potential synergies. Before we kind of expand on that, it's worth just mentioning that you've got the standard no shop, no talk, no DD obligations on Spartan, which makes it a bit harder for a potential interloper. They're doing that kind of blind in a way. You've got the break fee, which was $24 million.
They can't do DD effectively, can they? They've got to put an offer in without DD.
Yeah, effectively that's how it sort of read. You've got a break fee as well, Matty, which is relatively low. So standard is anywhere kind of between 1% and 4% of the value of the deal, the market caps of the companies, and here we're talking like near that 1% kind of range, $24 million.
Yeah, which I think was from memory was like Karora, Westgold, and that was like 40 million or something?
That was 40, and each company was half the size pretty much. So that was 4% of their respective market caps going into that deal.
Yeah.
So
and like, what's the time frame? Like, hypothetically, if it did flick to an off-market takeover, what's this scheme looks to be implemented mid-July? What could an off-market takeover possibly take? Like fucking ages.
Well, it often gets extended in reality. In the docs, you can see they've written open, I think 20 days is what they kind of peg it at, but you often see that get pushed as they want to get those numbers up, right? And they want to, they're not, say somebody comes in, they're not going to get to compulsory because you need 90 plus. That's a real piece of work, but you can push that up by extending it and encouraging people to take you up on that, right?
Yeah. So anyway, it's looking like it's there have to be something pretty crazy happen for an interloper to come in and offer stupid money. But hey, gold prices are at stupid levels. You never know.
They are.
Geez, it'd make things interesting. It'd make our lives interesting to talk about it. So look, if you want to throw in an offer, I'd appreciate it. I'm not even
just looking at looking at the share price, when the market gets pretty excited about someone coming in over the top as well, it often trades above the bid. We haven't really seen that here. Sort of Ramelius share price came off a few cents, and where Spartan's sort of therefore trading is almost bang on, just a touch below par.
About par, isn't it? Yeah.
Yeah, because I think Ramelius was implied for them at based on them at 220 and they were 217, and Spartan's trading at $1.74. So it's she's pretty bang on at the moment.
Yeah, and like in that deal I spoke about with Gina, she started buying straight away. We've only seen like 35 last time I looked million shares traded near the end of trading today. So that's well below 3% of the company's paper. You'd have to be going for a fair while to make something kind of happen. Bar the other 3 big shareholders that I said holding about 19% come to your side if you do have a sort of superior proposal for them.
Yeah, God, it's I suppose we don't know what's going to happen with Never Never yet. It's early early days. It's not developed yet. They've just sort of getting close to, I think mid-year they're going to be approaching like in line with Never Never. So there's a lot to play out, but like how this has ended up so different to what could have been, considering last year Ramelius were having a swing at Karora. They were then also talking about merging with Westgold. Not that saying merging with Westgold would have discounted this happening anyway, but I would say if they ended up with Karora and focusing on getting Beta Hunt going, like this I couldn't have seen this happening as well. So it's all panned out very differently, and on first pass, this is probably the best outcome for Ramelius, getting this asset in their portfolio. Whether there was a bit of like, oh, look over here, so you start looking over here while I look over here, and this was the grand plan in the end. But yeah, it could have ended up being a lot different.
Yeah, I mean they've had to give up a fair bit for it. It's
not as not as much as I think I had in my head it was going to be 55-45 or close to even a bit less if it was going to be all shares.
Cash component sort of swung a bit more in Ramelius's favour as far as the pro forma ownership.
Yeah, and they'll make that cash before the deal's done anyway.
Oh, at the rate they're going, yeah.
Yeah, so it's but it significantly increased their ownership of the pro forma. So synergies. We talk about synergies. This one actually, and we will compare what this means for the value of other goldies in the region based on, or in Australia based on ounces and projections and all this. But you look at this and you're like, there is some genuine bloody synergies, like geographical infrastructure, like it does make a lot of sense. And like, hey, as you said, JD, they're giving a bit away for it, but with that is coming the filling a big gap in that Mount Magnet outlook that they probably need, and just delaying, like not really having the pressure to put any capital into Dalgaranga processing plant because they've got their own.
Yeah, I mean, this is probably, correct me if I'm wrong, but it's probably the first deal, a gold deal in a little while in WA of this scale where we've actually seen these sort of geographical synergies. The last one that springs to mind was Genesis with the St. Barbara sort of Gwalia assets. But then even, like you said, Matty, I think Spartan was originally mid-year going to put out a study on Dalgaranga or Never Never. Now it looks like they're going to do work with Ramelius on like an integrated, Mount Magnet, study, just because it just changes the landscape so much and what that actually looks like. And it'd be interesting to see quantified what those geographical synergies could represent. Yeah.
It's so essentially, if we're saying it's the first gold deal that's made sense since we started the show. Genesis and
not necessarily made sense.
Gwalia.
I guess some
geographical
have been,
sense.
Geographical, because some have been more acquiring. I think we were talking about it early today. Like some we've seen have been acquiring more new hubs.
Yeah.
This is as far as in the same neighbourhood. It's been a little while, especially of this scale too. So, which is very, very cool.
Yeah. Right. Let's go. I guess look at what they're saying this pro forma's going to look like.
How cool is it to see a deal with genuine synergies? It's awesome, and they haven't put numbers to it, to your point, Ali, yet, but I would bet these numbers would be materially better than some of the other ludicrous kind of synergistic numbers we saw on other deals. So very keen to see what that integrated study that you spoke to there looks like. It also takes the pressure off Rebecca Rowe. So we spoke about it last week, Matty, with that big drop-off in production, the sort of production gap that everyone kind of speaks to with Ramelius coming after. Next year it's probably a bit too soon to fix FY26 materially, but between then and FY30 there was a bit of a lull in the numbers on Ramelius's front, and this will fill the gap there pretty handily. And they're speaking by the end of the year wanting to start sending ounces up the road. They sort of spoke to the conditions of that road. It's sort of 65 odd kilometres that I think in time they'll probably seal up. He spoke to that Zepner on the call. Right now it's just a gravel road, and they've actually trucked on it in the past going beyond it. So yeah, a bit to be done, but that integrated study should come out by December or that final quarter of this calendar year, which should be pretty cool to see. And to see what kind of scale they go with each plant. Like you said there, Matty, they came out with this plan going 2.5 to 3 million tonnes at Mount Magnet. You've got 2.5 at Dalgaranga. $70 million had been earmarked in the latest Spartan raise, and I think a few long lead items would have already been ordered there. But they're going to pull the foot right off that capex on that front and reassess things, which is pretty appropriate. And in due course, by FY30, they want to be doing 500,000 ounces, which is that's a pretty big year, you know, and that kind of implies that we're getting beyond 200,000 ounces from Never Never / Pepper, which is chunky. I mean, that year had only a bit over 100,000 ounces coming from the Mount Magnet area, so that's a lot of upside. And then obviously the piece being fitted in there as well was Rebecca Rowe for 150. So, Matty, what do you kind of reckon? I know you looked kind of deeply at the actual production side of things, where they're going to send ounces. You know, what do you think that looks like in the nearer term?
Yeah, it was on your comment about the 200,000. You don't get T-Mac on the investor calls too often, but he pretty much said, "Oh, I just want to hear you say it." You're effectively saying you're going to get over 200,000 ounces out of Never Never and Pepper, because it's exactly what you said. If they're going to have 350 out of the hub, the only thing that's been added in at the moment is Dalgaranga, like into the study they put out last week. So, like to get 200,000 ounces, you know, that's 1.4 million tonne at 4.5 grams. That's 200,000 ounces. So, looking at, and I'll get on to where they're going to send it.
How good was it straight away? Sorry to interrupt. Scans just saying, can you pull that forward, or can you kind of go overs on the 500? The first time they've mentioned it.
Yeah. Oh, they're advising them. So,
how good.
But yeah, that's it's all a function of, and I'll bring up the picture of the ore body here. Like, and they said they're not going. It's going to be about 2 years before they get to this. The honeypot where you got the increased strike length of the top of Pepper and Never Never together, and that's when they will need to be in that area, and I would anticipate a lot of other areas to really get 1.4 or around that sort of those tonnages out of Dalgaranga. Like, you know, they've got plenty of options. Like you got west winds, you got potentially the Freak area, you got what's the bloody one? Well, I probably should actually look at Sly Fox, and Four Pillars and all that. But that stuff might come out earlier. Who knows? But that's sort of what they're heading to. Like, because at the up the top there, where it's only like the first bit they get into that they'll start trucking this year. Like, it's probably only like it's about 100 metre strike length. So like rough maths, 100 metre strike length, 15 metre wide stopes, because it is a bit thicker. For 25 metre level space, and that's only 100,000 tonne of ore per level. Okay. So it's not like they're not going to be getting heaps out of that initially. So, but who knows by FY30, like what else they're going to pick up in the region. Like there is so much frigging drilling and stuff going on up in the Murchison at the moment, and I would imagine on an expanded processing hub, they'll be. Who knows what's going to be in the portfolio by then? But they've got ample options, and they've clearly stated in the call they've got to run a shitload of scenarios to see what the best bang for buck for the shareholders are for the capital spend. So your basic options are expand the living shit out of Mount Magnet, like to go from 3 to 4 million tonne, like it's a big step change because you're probably going to need. It's not the matter of like probably needing bigger pieces of equipment. You might need multiple pieces of equipment, like you might need multiple ball mills and things like that. So
there's that like a bit of an inflection point where you hit a certain level and it's not like linear. It's like, okay, now you got to step up X amount. It's not proportionate, I guess.
Yeah, you can only buy ball mills so big, is my understanding. So you might need multiple pieces of kit. So like they can either make Mount Magnet as big as possible, like expand that to say 4 million tonne. You've got the existing infrastructure at Dalgaranga, and when they talk about the 2.5 million tonne capacity there, that's a function of mostly the crusher size and the big sag mill they've got. But treating harder ore, which they're going to do, I would say they would have to put in a ball mill as well, like they were talking about putting a thickener in and all that. So,
well, that's what I was going to ask you. Actually, I was just curious, like. That mill, the purpose that mill was originally established for, I guess, which was, all these sort of open pits, right? Now, that you've got this Never Never and those sort of other areas that are underground, harder ore. I guess I was wondering, like, that trade-off between, optimising an existing mill that, maybe and for that new type of ore versus trucking it to somewhere else that's not too far away but expanding that capacity. I imagine that would all be part of their scenario analysis as far as bang for buck, right?
Yeah, and then when that was first built, there was always the plan to put a ball mill in later for when it was just initially designed to treat all the open pit material.
Sure.
And then once they got deeper and went underground, they would have added to the plant to treat to grind the harder ore. So it was always in the plan. It just never got to that point because
at that time,
because of the unfortunate downfall of Gascoyne. So the advantage of maybe potentially not expanding Mount Magnet as much, and then also and refurbing Dalgaranga, it means you've got two separate mills. You don't have to truck the Spartan dirt. It means when you got a shutdown at Mount Magnet, you could truck all your dirt to Dalgaranga and vice versa, and like keep you're always processing. You don't have those down periods, but then you need two processing crews. So you got extra manpower to run two mills, because I assume with all the services that support a mill, like you don't, to go from say 2 million to 4 million tonne in a mill, you don't need double the people there, because it's like a lot of it just means you got more capital outlay, but you just got bigger equipment doing a lot more work. So that's going to be part of the scenario, like the trade-off between extra capital at Mount Magnet and trucking the ore at a lower processing cost versus not trucking the Dalgaranga ore, and because 60 over 1 million tonne at 65 Ks, like it freaking costs a lot of money. Like it could be like 15, 20 cents a TKM. So that's going to be, and then like Break a Day, I don't know if there's a road going from Break a Day. They could probably, if it's easier to get that to Dalgaranga instead of Checkers.
Just sort of optimising where to go. I guess the other scenario to throw in the mix there, and I'm not sure how feasible this is would you keep the existing Mount Magnet infrastructure that Ramelius has and repurpose and optimise it for a combined production profile with the Dalgaranga ore, and repurpose the Dalgaranga mill for Rebecca, right? Is it as easy
move it
to actually move it? Like, is that actually, am I talking out of my ass, or is that a feasible thing to actually do?
Yeah. Like they can. I know you can move your grinding circuits. I think relatively, not easily, but like I think you can. Like I don't know if they could move the sag mill. Like I don't know if you can dismantle crusher. I think leach tanks and stuff are a bit hard because they're like full on concrete
rooted into the ground. Yeah.
Like I think it can be done, and like moving it and unbolting and things, like they can get deformed and stuff. Like I think it all can be done, but by the time you truck it and everything. Sometimes like the cost of that and the dismantling, like it's the
Is it
trade off
worth
of
it?
being between putting a new one in. But I think there is opportunity. I'm sure there is some bits of kit you can take. But when you're building a whole frigging mill, like there's still going to be the outlay. So
Of course.
yeah. So and as I said, it's knowing what future bits of dirt are going to
Where?
go in the future in the region. Like they're not going to really, if there's some, a few 100,000 tonne of oxide material they can get a hold of in the region, I'm sure they're going to take it. And they open themselves up to ore purchase agreements and everything. I think this deal we'll talk about in like you mentioned Westgold. Like I think now that they've got, if they're going to have Dalgaranga in the portfolio and the infrastructure there, it's really taken away a lot of synergies with Westgold that they would have been looking at as part of a merger last year. Essentially Tuckabianna is not needed now if they've got Dalgaranga there, if they could spend a bit of capital to create a hub there. So like Tuckabianna, Big Bell, not really needed for them now. Like they would get the Bluebird mill, put out like Great Fingal, then Starlight's Fortnum's on its own. So I don't see them. Yeah, I think Westgold are on their own now, and this is the whole Ramelius and Westgold thing won't ever be a thing now.
Yeah, and on moving the mill, like there's a lot of tons to get through in Mount Magnet sort of broader area. Like Eridanus stage 3 alone is 24 million tons. You've got another 11 at Q, and their sort of broader other Mount Magnet, what they sort of group together is 40 million plus tons. So I think there's a lot of use from having the mill there, and I wouldn't anticipate that being moved.
No, I think it's pretty clear cut. It would either be, unless they picked up a fucking shitload of ground in the region, it's either going to be a 3 million tonne or 2.5 to 3 million tonne mill at Mount Magnet, which was part of their original expansion, and refurb Dalgaranga and sort of treat them both.
And optimise them.
Yeah, and so they can still get all the tonnes from the Mount Magnet, the Eridanus cut back through, or just upsize Mount Magnet to 4 million tonne. Instead of just completely disregard Dalgaranga and just send everything there. So I think that's going to be what the decision pending would be. I don't see many other scenarios, or they won't expand Mount Magnet at all and create a 1.5 mil or 1.5 million tonne mill at Dalgaranga. So yeah, 3 options, I think. So we will wait and see. Bloody exciting. Love it. What else is? Oh, no, interesting. Interesting underground mining thing that no one else would care about unless you're an underground miner is the contract up there. So Barminco are currently at Dalgaranga. They're doing the Juniper decline. They just got extended for another 1,000 metres after like the initial, I think it was 1,200 they got initially, something like that. Anyway, they got given another 1,000, and that's scheduled to finish about pretty much around the same time that this scheme would be implemented, mid-July. Okay. So, and you look at the actual scheme docs, it says like Spartan's obligations with Ramelius during this period before it's implemented is that they must consult Ramelius in regards to the contract award processes for the underground mining services for a contract that exceeds 12 months. So Barminco went in extremely cheap for this exploration decline. Once you're there, hopefully on the proviso, you get the first look in and you're already there for the ultimate production and development contract. But Burncut have the contract with Ramelius at Mount Magnet, and they just signed that recently for another 3.5 years. And part of that contract, I don't think it's definite, is the potential break of day underground. So are there contractor synergies? So now that this deal's happening, will Ramelius look to secure the same contractor for all operations? There's probably not, like, considering it's 65 k's away, I think, from Mount Magnet. It's not It's hard to, you can sort of swap gear around if you needed to in emergencies or people and send them to different operations, but considering the size of it and the separation distance, they probably are standalone contracts. So there's probably not, like, if there is contractor synergies, and you could say maybe have one project manager for two of it, or less management to cover both. Like Ramelius would save money that way, but I think they'd probably still be standalone contracts. But be interested to see.
Yeah, and you as a bigger company as well, naturally have more sway over your contractors and your suppliers, whatever they may be supplying, when you're a bigger entity.
Yeah.
So
I think it just got a bit more competitive for Barminco anyway on the contract.
I definitely agree with you there, mate.
Yeah, and that'll be probably, I would assume that it'd have to be, because they'll be wanting to, if they're saying they're going to be at the ore, bringing out ore by the end of the year out of Never Never, that means that contract will have to be sorted out soon, because they're not going to leave a lull period between when Barminco's one finishes. So, mate, no, that's the next big contract. And the best thing about when contract tenders are going around, they're all like, nah. Oh, yeah, Barminco's got it. And then another like, nah, mate, I heard Burncut's got it. Nah, they've got it. They reckon they've got it. Oh, love it. Love it. Great pub talk. Oh, mate, and think of the pub talk about when they're seeing friggin' Sandvik Ground Support trucks flying up the Murchison. Sandvik are making the Murchison great again. They're just going to be feeding bolts into this underground mine. I cannot wait to see it. Anyone sees the Sandvik Ground Sports truck driving up the Murchison, I assume they've swapped the DSI logo for Sandvik logos
probably
on it.
by now, yeah.
Yeah, you'd think so. Bloody get a photo of us. That Mount Magnet mill's just going to be, there's going to be Sandvik split sets and mesh and everything just flying through that. The magnets are going to be picking them all up after they've done their job of making the ground safe. And mate, if you want to get rid of the mesh and the friggin' bolts before it goes in there and just make the ore nice and pretty, get old Milesy up there. Milesy's Miles Contracting. He can remove your, once Sandvik have done their job, Milesy can make it look pretty for you as well. The ore cleaner, making the Murchison great again. I love it. Couple of other notes from the calls, buddy. What did we get? Oh, tax losses. Apparently another benefit to Ramelius is a lot of the tax losses that are contained within Spartan that were brought in by the Gascoigne days. So Ramelius, because they're making money, heaps of money now, they're paying tax, which would piss them off. So it sounds like a lot of the infrastructure at Dalgaranga can be used as depreciation for Ramelius. So that'll come in. So there's a bit of offsetting to do there. So,
Matty, what do you reckon?
I think you've mentioned that 2-coat seal. They got to chuck on that road. Whatever a bloody 2-coat seal. Does that mean it's bitumen? Nah, must be just.
They can ask Minrez.
Yeah, that's about it. What else, JD?
Mate, you did a bit of digging on how this deal and the valuation of this deal reflects on the rest of the goldies. So I think it's worth kind of flicking through, the more or less standalone groups, the Bellevues of the world, kind of Pantoro, Catalyst sort of come to mind. A lot of them have had, Bellevue excluded, pretty good runs of late, given the gold price movement. What did you sort of come to in that analysis you did?
Yeah, and like we're thinking of, okay, we're inferring that, okay, they're pretty much saying Dalgaranga is going to add at least 200,000 ounces to FY30, and they've paid $2.4 billion implied price for it. So we're like, right, what does that mean for everyone else? And that, as I said, I'll caveat that with that $2.4 billion is backed by some genuine geographical and infrastructure synergies. So that's like what they're valued at, I don't know, but and
we're doing pretty rough analysis, not just focusing too much. Yeah.
Just the way
Matty's bush maths.
And they're bringing in some exploration now as well. Like, I think the fact that they're going to really amp up the exploration spend and bring in that technical. You can say like, God, you got to compliment Spartan and the job they've done. They've 17x that share price. in a couple of years, like less than a couple of years. And so that's getting a bit of that expertise in Ramelius. That's just adds to it as well. So, but
it's been a hell of a run.
Yeah, and I think it is making bloody Bellevue look interesting at these prices because, like, their market cap is 1.7 bill. So remember, we're valuing this Spartan that they're valued at 2.4. Bellevue's 1.7. They've got 100 mil of debt, 80 mil cash, and but the hedge book is 390 mil out of the money. So that gives them an EV of 2.1 billion. They're based on what they're saying is what they're predicting. They're 2 quarters away from hitting a 200,000 ounce run rate is what they're predicting if they execute. But the ground is pretty hard at Spartan. From what I hear, it doesn't sound like it's Bellevue hard, but it is hard. It's not like cream digging and they're going to fly through it. And look, I'd anticipate the capital and operating costs for the underground development at Spartan will be a lot lower than Bellevue, just as a function of the layout of the ore bodies, and be a lot of jockeying of power, vent, and pumping and everything like that. It's not as spread out, so probably a bit better bang for buck per metre. But look. But Bellevue are already, like, this is 200,000 ounces is still years away at this operation. And 200,000 ounces at Dalgaranga will be a bit of a stretch in my opinion. But, Bellevue are...
Well, they're currently producing,
it's
right?
They're nearly there right now, and all the infrastructure, a lot of the capital's been sunk to get there, and they're cheaper than Spartan. So, like, this quarter, I think coming up, so next month, they're back quarter weighted. I think they're saying Bellevue, but their next quarter, if they hit the low 30,000 ounces, that's probably a cash flow break even for them. Maybe a bit negative. Hopefully, like 4,600 odd buck gold price is really freaking helping them. They'd be in a lot of bloody hurt there, but they don't have to truck their dirt. They're sort of approaching that inflection point possibly if they execute. So yeah, that's when you put them side by side. It's like, well, have they overpaid for Spartan, or is Bellevue cheap at 2.1 billion?
I guess on the trucking side of things, that's assuming that they truck to, this is Spartan or Ramelius, decides to truck that Dalgaranga ore from Dalgaranga to Mount Magnet, as opposed to using the nearby mill that's currently there.
But you still have to put the capital in.
But so it's either the trucking or the sort of the money you're putting into the refurbishment of that.
And 2 years of all the capital underground
Leading
development to get to that 200,000 ounces, which is a lot of money. So, I think them side by side is very interesting. But these ounces they're getting out of Spartan, they're unhedged. Like, they're not got full upside of the gold price. Pantoro is another one.
Yep.
Everyone's going for 200,000 ounces. It's easy. It's a good round number, so it's an easy one to compare. They're talking about getting to 200,000 ounces by FY28. They're over 1 billion market cap, bang on around 1 billion. Again, probably a lot higher costs than Dalgaranga, a lot of narrow vein and everything, but existing plant. They're in the process of replacing the open pit feed with underground feed. Got 120 mil cash, only got that US 12.5 million con note, but, EV of 900 mil. So I think they're looking good, interesting side by side. Catalyst, as you mentioned, JD, like, they've nearly 6x'd in a year, but, like, still it's probably a function of shares on issue. They're still, what are they, just below a bill? They've just cracked a bill. Market cap, debt-free, unhedged. FY27, they're forecasting 200,000 ounces. So all these 200,000 ounce numbers are coming well before Spartan are going to release. The Dalgaranga is going to release, potentially get 200,000 ounces. Their mill is underfilled. So for the 1.8 million tonne per annum mill at Plutonic, it's only getting 1.2 through it at the moment. So they've just hit first ore at Plutonic East. I think they got that. Is it K2 or something? They've just started developing down into that. So, again, under half the half the implied price of what they're paying for Spartan's ounces. So, yeah, I think when you put them side by side, it's, you don't know. Are they overpaying or are they other ones cheap?
Yeah, I'd add a couple of things, Matty. Firstly, on the value that Ramelius is paying for Spartan, pretty much 20% of that they're not paying. They've paid for in the past, but that was sort of at half the share price of today in a way.
So you could say 2.2, like effectively, because they've nearly made 2.
I can't remember what they exactly paid.
Yeah.
And then you've also got the cost side of it, which is like the big one we haven't mentioned. But just looking at those kind of forecasts on, for instance, Catalyst, FY25, sort of $2,400 an ounce, all in sustaining cost. FY26, 2,200, and that kind of maintains, or they try to pull that down over the years ahead. So cash flow is all that matters at the end of the day, and we'll kind of see what it comes out at for Spartan, hoping that higher grade. Obviously, that grade is kind of comparable in a way with Bellevue, and you would expect those two, because of that, to have pretty competitive costs. But yeah, we'll see them get there first.
What do you think about the gold space in general, JD? Of where are we approaching? And I'll get started on the juniors later. But where do you think we're sitting at the moment with the valuations, multiples, and has everything risen to where it needs to rise to in accordance with the gold price or not?
Mate, it's a super, super interesting part of the commodities market right now, right? And yeah, let's definitely bring it down to the juniors in a second, because it's interesting comparing juniors to your mids to your sort of mega cap goldies. But I reckon the space in my mind has been getting more and more attention lately. But I don't reckon the valuations are what they kind of could be. And I think everyone just throws around the old comparison of the GDX, that's the miners index, versus the physical metal since, say, 2010 roughly. And GDX has been an underperformer, especially since sort of 2012-13 when things fell away, that cycle really unwound. But even if you look back 5 odd years to the beginning of COVID, we've seen pretty awesome margin expansion. We're hopefully starting to see that, and we have with some companies start to see that come through. Say Evolution last quarter was an awesome cash print, and hopefully we see that more and more across the board as the gold price runs away and costs, they are up a good bit. We had that really inflationary kind of spell, but they're not up to the same extent. So those margins have had a real step change to them. Balance sheets are improving, like the net debt positions across the board are pretty healthy, and the ones that do have substantial can hopefully pay that down. M&A been pretty sensible across the board in my mind. Capital allocation's been pretty good, but the physical versus the miners has it's just gone in one direction. That physical metal has just outshone the miners themselves, and that's mainly to do with central banks and what they've done, and everything that sort of came about following Russia's invasion in Ukraine. But I reckon there's a serious potential tailwind for these miners, and this will push all the companies we just mentioned in the right direction. If you start to see the multiples kind of match what they were a few years ago, or even, God forbid, expand on what they were a few years ago, to really compensate for the added kind of moat and margin that they're now making. And I think that's super interesting. And we've started to see more funds wrap up these dedicated gold funds, or open gold funds they may have closed previously to new investment, those sorts of things, which is an interesting anecdote in my mind.
Yeah, just to add to that, I think even you've seen a lot of the gold producers where they've just finished delivering into their hedge books, or they're sort of working through them and working down in them, but then as their hedge books are decreasing, they realise gold price for, say the next quarter is maybe a few $100s an ounce more. So then, that's still, it's sort of been washing its way through, but I feel like it's still continuing to do so for some of those producers that do have hedge books in place, or finishing them off, or just finished them. So, immediately, next quarter, you're getting the realised price increasing from that, but then also the gold price has increased as well on top of that. There's that, the whole, PNAV thing, usually we've, in these real bull markets, we've seen, the PNAVs for gold producers sort of above that one times PNAV being priced to net asset value for those who don't know. And, a lot of them are still sort of sub one or barely breaching one just at the minute. But yeah, that comment about not just necessarily gold funds starting to being, opened up or reopened and things like that, but that whole shift of, if you're taking away the technical fundamentals away from the story, just the fact that the flows from generalists into gold, just that in its own right, could be a seismic shift in this space, even if you chuck all the fundamentals out the window.
That'll be without doubt the biggest shift if it does happen. And yeah, on the PNAV multiples, you see a lot of these companies trading at sort of 0.7, 0.8 times consensus, and that's sort of flushing through a gold price that's sort of hundreds of bucks below where we are. So you think about that in the sense of a spot gold price being flushed through, and you can make the case for a lot of these names being, the whole basket of names being pretty bloody cheap. But yeah, there's a lot of concerns at a macro level around the world right now. And I think people tying in with that understand the importance of having a bit of gold in the portfolio, whatever they think of the miners, But I think sooner or later, if things persist, people do start to look at the miners.
I don't think we've yet seen the retail really flow into small caps.
There's sort of been glimmers, but it hasn't. It's not reminiscent of a full, gold bull retail market just yet. It doesn't feel.
Nah. And
nobody cares, do they?
Nah, but you look at what like the lithium retail mania when we a couple of years ago. We haven't really seen that for gold yet. And look, I wouldn't be surprised if that's on the way. How good's that? I'll be right there in it too.
I think the outlook for sort of society and what's going on, if the gold price goes in that direction, is quite concerning to think about. But
I think we've got bigger problems.
But
right.
But it'd be great for gold juniors.
But even if it stayed at this level right now, and sustained here, that is still a shitload of value for bigger companies picking up juniors to increase their ounce profile because they're making such good margin on the dirt. So
they will struggle to find the good projects to put the cash into, because if these gold prices maintain and they keep costs down, they'll be making such healthy money. It'll be a very interesting sort of shift in how the companies have to act with their sort of cash balance and how they have to allocate capital.
Yeah, I think.
Things don't tend to stay still for too long. So
I think just things that are occurring to me. You look at this deal and geographical synergies and the theory behind it. I think if Westgold are out of the race with these two now and they're thinking, right, what's our next play? I think that talk of Westgold Pantoro really might start heating up, I think, because it's a bit of a carbon copy of this on a different scale, because them getting that Norseman dirt to feed into an upsized Higginsville mill actually sort of makes a lot of sense, whether they go down that road or not. Because Westgold's back up near $3 now, after it sort of had a rip in the last couple of weeks. So
2.7 billion market cap.
Yeah, so whether their script starts, they'll consider using that to maybe look at something. I
think you'd want to see at least a couple quarters of demonstrated improvement on those sort of matters that they're addressing, sort of post that guidance cut, just to give a little bit more confidence in that script, I would have thought. Which it seems like that's what they're working on and working towards, but I think you'd want to, see that fleshed out in some hard numbers and results in the next little while too.
Yeah, because they won't have the ability to put the cash kicker in like Ramelius have had. You wouldn't anticipate. They do have the facility. They could.
Oh, they have the facility. They could
for
raise
it.
money, but you'd probably want to do that out of your cash balance or cash flow. I'd imagine that's something that they decided to pursue. So. Yeah, no, it's fascinating.
In the midst of this deal, we're like, right, what's the fucking next one?
Good to enjoy this one. I think the great thing as well, which we've sort of heard anecdotally around the grounds, which I think's super positive, is just sort of a bit of renewed optimism in these sort of goldfields areas around, I would say Western Australia in particular, and the flow on that has to contractors and businesses and all that service the mining industry, which we all know gold drives a lot of that work. So that's really awesome. Great to see too.
Yeah, now they're making more money. If you want to make more money, get us to sponsor us and we'll tell everyone how good you are.
That too.
Talk about the best use of your capital. That is one way I can guarantee you will make more capital.
Mate, roll them out right now. You're on a heater.
Give me a rig. Give us a rig. Who better? No one else does it.
I love it.
Yeah, so bloody how good is it? I'm so happy. All my stocks are going up. I'm fucking loving it. Never been happier.
I love the correlation between share price movements and your mood. It's great.
Except me uranium one. That hasn't gone up. But
soon, hopefully.
Knock on wood.
Righto, sensational. Thanks for joining us, Ali
Pleasure.
GC.
Pleasure.
Great to have you back. It's just
go gold.
See, if it's a lithium or uranium deal, you wouldn't have come in, but a gold
nah.
one, you've got to show.
Got to show my face. That's it.
Righto, thanks JD, and thanks to all the bloody partners as always. $100 off your underground operators tickets. Get them while they're still there. They're running out because we've sold so many. But they're still there. Bloody bargain of a lifetime. Our great partners, Mineral Mining Services, Grounded, Sandvik Ground Support, CRE Insurance, K-Drill, WA Waterballs, Swick, Quattro Project Engineering, and Cross Boundary Energy. Hootaroo.
Hootaroo, guys.
Nothing like green on screen.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.